welcome to Mid-State Money Talk. My name is Cynthia DeFazio, joined today by Al Dietrich and Joe Dietrich of First Choice Financial Services Incorporated. And to our viewers at home, we're going to talk about taxation in retirement. Are you ready for it? You don't want to miss today's show. Joe, let me start with you. How are you this morning?
I'm doing well. Good to see you.
Good to see you as well. And Al, how are you?
I'm doing well. Thank you very much for asking.
Absolutely. Yeah. Such a nice time. I love having you both in the studio. It's just a nice way to start the day. Yeah. To our viewers at home, are you under the assumption that your taxes will go down in retirement? Well, a lot of people are surprised to learn that they could actually see their taxes go up in retirement. Well, how do you navigate that? What do you do? What are some proper things that you can kind of put ahead, if you will, to make sure your taxes are comfortable? But first of all, I have to ask a very important question. The difference between tax planning and tax preparation. So often people get very confused about the two, but they are not the same thing. Al?
Absolutely not. When you talk about tax preparation, that's dealing with the situation after the fact. You need to find someone who can appropriately fill out your forms, make sure that there's not a lot of issues regarding, the spelling of your name, the numbers that you're putting down, those type of things. So every year we have to do a tax prep. However, when we're talking about tax planning, it's a whole different ballgame.
Okay.
Tax planning is when we're talking about being a little more proactive. So you would begin your tax planning maybe in the fall of the previous year.
Okay.
Take a look at what your taxes are going to be, and at that point in time, you can also get a feel for some options. You can make some decisions in advance. So we definitely encourage being proactive and not reactive.
Great analogy to use with taxes. Be proactive, not reactive. So, Joe, I want to ask you a very important question. Why is it important for people to engage in this type of tax planning when it comes to navigating your tax bill in retirement?
Yeah, absolutely. So in retirement, like Al said, this is a time where we have more control over our tax returns than any other time in our life. And we've been told, and maybe we've followed, to start saving for retirement. And a lot of those retirement savings are in qualified accounts. Those are in tax-deferred accounts. So your 401k, your IRA, if you've got $1 million in that account, well, bad news, not all of that money is yours because you're going to need to pay some taxes on it when you pull it out. So we have a tiered tax rate right now. The highest is 37%. Your taxes might be 22, 24, 32. But for round numbers, let's say 25% of that money is going to go to taxes. That means that a quarter of your retirement savings, that's not yours. That belongs to the government when it comes out. So that's why it's important to get ahead of time. And there's some steps that we can take to maybe lessen that and maybe spread that out appropriately.
Okay, wonderful. Well, I know it's very important for people to understand what their tax bill will be for every dollar that they own. And we've mentioned that there's actually 3 types of taxation. I'd love to go through those 3 types right now if we could. Taxable accounts. Al, what are those?
Yeah, they're not nice. But, taxable accounts are accounts that you have, checking account, savings account, typical bank accounts, CDs, so that any return or earnings that you get on that is on an annual basis, it needs to be reported to the IRS.
Okay.
This include brokerage accounts that are not in a retirement account. It does not have a qualified as
exactly.
well.
So, okay.
Exactly.
Bonds, if they're in a brokerage account, they're going to be also included with CDs and money markets. Yep.
That's exactly right. Yes. Yep. Yeah, and the 3 types are non-qualified, qualified, and tax-free.
Okay.
Yeah.
Now, for the taxable, if you've got earned interest in there, that's going to usually be regular income. So whatever your tax rate is, if that's 22 or 24%, that's what you're going to be paying on that money.
Okay.
If it's capital gains, that could be anywhere from a 0 tax rate up to a 20% tax rate. So each of these have things that we're reporting year over year.
Okay, and money market funds as well, would those be counted
Absolutely.
as well? Okay, perfect. Yep. Joe, I want to ask you, obviously, so many people have the next one, which is so popular, the tax-deferred accounts. Talk to me about what the tax-deferred accounts are.
Tax-deferred accounts. We always have these terms and
Yes.
make sense to us. We talk about them all the time, but maybe not clear to you at home. So tax deferred, or what we would say qualified accounts, these qualify for a special treatment, a tax deferral treatment. This is where we've made a deal with the government that we're going to be able to save money without having to pay tax on that earned income that year. And we're going to defer that to pay the tax when we draw that money out in retirement. Now, these might be, everybody's heard of these, 401ks, 403bs, your IRAs, all of those retirement accounts that you have with your employer are going to be included in this bucket.
Okay.
Yep.
What about annuities? Are they as well?
They are a special case. Yeah, annuities actually also qualify for tax deferred treatment as well. A lot of people don't know that.
Okay. All right, Joe. Thank you so much. Al, I want to talk about this next one. This is so exciting. Tax-free accounts. Let's spend some time really talking about tax-free because everyone loves tax-free.
Tax-free is great, especially the older you get.
Yes.
You know, when you get a little older in life and now you have to start taking your RMDs and that type of thing, you want to go on trips, you want to buy a new car, you want to replace your roof. Tax-free money is good.
Yes.
You know, you don't want to have to borrow $25,000 out of your IRA to put a new roof on your house and then have to take more money out of your IRA to pay the taxes on the $25,000.
Exactly.
Okay. So when we talk about tax-free, we're talking about accounts like a Roth IRA.
Okay.
Okay. Like life insurance is a tax-free account. You know, municipal funds, bonds are a tax-free account.
Okay.
You know, and we're talking about the taxation of money. And we always tie the word account to that. Okay.
Okay.
But what clients are really asking us when they come in is, you know, I want an IRA, I want a Roth, I want this and I want that. That's the taxation of the amount of money that you have in any particular account. We will get to accounts later, but I just wanted to make sure that you at home understand that it isn't necessarily an account, it's the money inside of a certain account.
Okay. So, Joe, it's very important for people to really be thinking about tax planning when it comes to their retirement years, especially before they get to retirement. Would you agree?
Absolutely. And it gives you so much more flexibility to have the retirement that you want if you start planning ahead of time, specifically in the tax qualification of these different accounts. Like Al said, these are not telling you which investments you're choosing. This is just the account's tax treatment. And so having multiple tax treatments, and I think we'll talk a little bit more about it,
Yes.
how that really comes to create the type of lifestyle or the income that you want and how that gives you flexibility. But it's super important to start early because you can't just one day wake up and say, I want to move all of my money into these different accounts. There's consequences to that. So we need to start planning and funding those accounts as soon as possible.
Joe, thank you. Al, thank you so much. To our
Sure.
viewers at home, there's a number to call on your screen. That number is 888-959-2743. And if you're sitting in the viewing audience today and you're thinking to yourself, this is the very first time that I've heard about 3 different types of taxable accounts. I need to understand this with my retirement. I need to make sure that my taxes will be navigated comfortably. This is the perfect time for you to have a customized retirement plan designed just for you. All you have to do is call in 888-959-2743, or you can grab your smartphone. It's even simpler. Click on that QR code at the bottom corner of your screen. That takes you right to the landing page for First Choice Financial Services Incorporated, and you can schedule your time accordingly. Remember, today's show is all about taxes and taxation and retirement. And if you're one of the people that are unsure what your tax obligation could be, this is the perfect time for you to call in and have that beautiful retirement plan drawn up for you. We're going to take a very short commercial break, but don't go anywhere. When we come back, we're going to talk about some problems and some solutions that can arise when we're planning for taxes in your retirement. Stay tuned.
How I got in the world of finance? My brother-in-law had a friend that was in the business, and he was looking to find an agent, and I was looking for a job. I was really hesitant, almost didn't do it. But then I thought, I got to have a job while I'm looking for a future, and so that's why I took it. And then one day I was asked to deliver a death claim check to a family This was a very emotional situation, and my son was there watching this whole thing. So as I sat down and went over the amount of the money and how it should be spent, oh, she was just up and hugging me and thanking me. And at that point in time, it hit me that what I'm doing is really important. It's not just being in the life insurance business. And so it was just a few months till I was independent. Yeah, I couldn't do what I wanted to do as a captive agent. As an independent, it allowed me to be flexible with my time. And now the blessing is that Kevin, that young man I was talking about, he is now joining me in my practice. And his brother, Joe, is joining me in the practice. So the future of First Choice Financial Services is in great hands.
And welcome back to Midstate Money Talk. My name is Cynthia DeFazio, joined today by Al Dietrich and Joe Dietrich of First Choice Financial Services Incorporated. And we're talking all about taxes in your retirement. Now, we've already gone over the three types of accounts: taxable, tax deferred, and tax free, and how allocating your assets appropriately will really help you navigate the very confusing trajectory, if you will, of taxes in retirement. We're going to talk about some tools for the retirement, if you will, some tax help, if you will. That's what I'm trying to say, English version. But Joe, before we do that, can you tell us a little bit about where we are currently in tax history?
Yeah, absolutely. So this is probably going to come to a surprise to many people. We are in the third lowest tax bracket in history.
Wow.
So when you think back to the 70s, 80s, the highest tax rate would be 50% or 70%.
Wow.
And here we are, highest tax rate in the 30s, so 37%. So we're actually in a very favorable tax bracket right now. So to be deferring those taxes to the future, we are making some pretty costly assumptions.
Absolutely.
It's very possible that when we were starting to draw that income out, we could be looking at significantly higher tax brackets. So it's this myth that, well, as I'm working, my tax rates are high, and when I retire, they're going to be low. Most of us don't necessarily experience that.
Absolutely.
Yeah.
And it's so important to realize where we are exactly in tax history. I'm so glad that you referenced that, Joe, because so many people think, oh my gosh, taxes are so high, but are they really compared to where they were before?
Yeah.
Well, Al, I want to ask you a very important question. Obviously, a lot of workers out there today have a bulk of their savings, if you will, in a 401k. And so we know that that's going to be one of the accounts that can be taxed. Talk a little bit about why we don't want a lot of that money going to the government. What are some things we can do to help that a little bit?
Well, yes. We constantly talk about a plan.
Okay.
Okay. And well, Joe says we're in the third lowest tax bracket in history. Mm-hmm. Spending becomes as equally as important as the tax rate.
Okay.
Okay, for our government and for ourselves, right? And so there's different ways that you can assemble the funds for your income.
Okay.
One is, like you said, most people have their money in IRAs, 401ks. Mm-hmm. In fact, when we see folks coming into our office, most of the people have probably 90 or more % of their money in their 401ks and IRAs.
Okay.
And so that's the tool that we need to work with. So there needs to be some planning take place so that we can systematically make some other, let's say, buckets of money, so to speak, okay? Open some other accounts that when the day comes that we do have to start taking money out to supplement our Social Security, that we have different funds that we can withdraw money from and sort of guide our tax bracket to where we want to be, and not all of a sudden get our taxes back from the tax professional and say, hey, this is what you owe the IRS. And that's not a good surprise.
No, it's not.
Right.
And when you think about it, if people are withdrawing money and they're having all their income coming in that they actually need, but then maybe they have to take additional, let's talk about how that can trigger some negative effects, Joe, if it's not being planned for.
Yeah, absolutely. So like I was saying, we want to start early. Maybe we want to be contributing to our 401ks in a Roth version and take that tax obligation now while we're in that third lowest tax bracket in history. Maybe if we're in a situation where we've started to the retire slow process, where maybe we're cutting back or we've just retired. We might be in a stage now where we want to take on some Roth conversions. So there's other tools that we can use, because we don't, like to your point, we don't want to end up to the situation where we're in all qualified money. Now we start taking that out, and now that starts building that income base to the point now where we are paying more taxes on our Social Security. We're paying a surcharge on our Medicare. So our Medicare, people may not understand this, our Medicare premiums could go up if our earned income is too high as well.
And you have a client, absolutely, Part B as well.
Part B, yeah.
Thank you so much, Al. Joe, you have a client story to share as well, talking a little bit about people that are blessed with both good health and they enjoy their careers. Let's talk about that couple.
Yeah, absolutely. Yeah. So, as we're thinking about this topic, a couple of people came into mind, and we've had some clients that are really blessed. They're in their mid-70s, but they're healthy, they're energetic, they love what they do. And we also have some clients that have worked really hard, and they've got maybe both spouses have a pension, so they're also blessed. So these blessings, we think, that's great, right? We're starting to stack income in our later years, and now we are in the RMD category. Now we're in the required minimum distribution phase, and the government has said you've had that tax-free money long enough, and now you are going to be forced to withdraw that. This is a required minimum distribution. You must take this. So now we've added that on top of the pension income, the income from the job that you love and you want to continue to do, and it puts a tax burden on every single layer of that income. Social Security, Medicare, you're into higher tax rates. So like I said, that myth earlier where it's like, well, my early years, I'm paying all my taxes. When I retire or get a little bit older, those are going to go down. That's a myth.
Wow. And so a lot of people are probably unaware of that, because we've all heard people say, oh my gosh, wait a minute, I'm going to retire, so I think my taxes are definitely going down because things are going to be changing for me. But that is not necessarily the case from what we're seeing today, Al, correct?
That's correct. That's correct. The tax brackets are what they are.
Yeah.
And those that are in place now are scheduled to go away at the end of the year.
But 2025.
At 2025, yes.
Wow.
And so it may, and if it does, then the government's going to have some decisions to make there. But it's, and when you're taking the money that, like Joe's saying, you're taking your Social Security, you're taking your pension, a lot of folks use dividends to enhance their income. And that's added into it as well, and it can force you to where, based upon that money and how it's coming in, to go from paying nothing on Social Security or tax on 50% of your Social Security to as high as tax on 85% of your Social Security.
Wow.
And income is what we want, but again, I think the objective is for you at home is to have a plan where you can take part of your income from a tax-free fund.
Yes.
You can take part of it from a tax-deferred fund, and you can take part of it from a taxable fund as well.
Okay.
There's a lot of strategies that we use, and those strategies are explained to the clients, prospective clients, when we sit down on an interview with them.
Okay. So it is imperative to really have a proper tax planning strategy in place when you're looking at the retirement years, 100%.
Yes. Yeah, absolutely.
To have a toolbox, if you will.
That's right.
Gentlemen, thank you so much. To our viewers at home, there's a number to call on your screen, 888-959-2743. And if you're in the audience today and you're asking yourself, do I have a proper plan for my taxes in retirement, or if I'm going to be hit just out of the blue with this huge tax bill, how do I take control today? This is the perfect opportunity for you to have the customized retirement plan drawn up completely for your needs. It's no obligation, completely complimentary. 888-959-2743 is the number to call in. If you have your smartphone handy, we've made it even simpler still. Just grab that, click on the QR code at the bottom corner of your screen. That will take you right to the landing page for First Choice Financial Services Incorporated, and you can schedule your time accordingly. We're going to come back from this very short commercial break. We're going to talk about some tools in the tax control toolbox. Do you have some already in place? Stay tuned. You're not going to want to miss what this segment's all about.
The The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. The one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Midstate Money Talk. My name is Cynthia DeFazio, joined today by Al Dietrich and Joe Dietrich of First Choice Financial Services Incorporated. And we're talking all about taxation in retirement. Are you ready for it? Do you have the right tools in your toolkit? We're going to do a deep dive right now. Joe, obviously, it's so important to have the proper tools in that toolkit for tax control when you're helping someone with their retirement. Let me ask you a little bit, what options are available to have people just navigate that a little bit easier with that when the tax man comes knocking, if you will?
Absolutely. Obviously, and we've mentioned this many times, planning. Having the appropriate accounts set up and funded will allow us to have much more flexibility to set up your customized income plan that we're able to draw from multiple accounts. And that will be able to control and give you some flexibility in order to have the tax rates that to the extent that we can control. The other thing we want to do is think about planning ahead. Like, we know we're going to probably need another vehicle. We might need a new roof. We might have big purchases later in life. Okay. So we can forecast that. But it's also important that if we're going to do that, maybe we want to take those withdrawals over a 2 or 3 year period in order to smooth out that tax bill as well. So it makes me think of, somebody that came into our office. Brent and Sally came into our office and they were saved really, really well. But they kind of had this default pattern. We looked on the internet, this is what we're going to do. They had this plan in mind. We're just going to go straight forward. We're going to use all of our non-qualified money, and then we'll be left with our qualified money. Well, I showed them how that's going to be kind of a tax time bomb, especially when RMD hit. So we set up a dynamic income strategy for them, which would give them much more flexibility. That tax-free money, the taxable money, will allow them to be able to smooth out those taxes because we took a long-term view.
Wow.
One of the tools that I didn't mention is, the one that we hear a lot about, Roth conversions, the Roth account. So that is obviously one of the biggest tools in our toolbox before and after retirement.
Joe, thank you so much. And Al, I know that you are a passionate person about Roth conversions for your clients. Let's talk a little bit about what exactly does a Roth conversion do for someone's tax strategy overall? How's it done?
Well, a lot of folks come in and they say, well, I want a Roth. And how do we do that? Well, a lot of times we start off by saying there are 2 things you need to know. There are contributions to a Roth and there are conversions to a Roth. Contributions have limits within the tax structure. Okay. Conversions, you can convert as much as you want, as much as you're willing to pay taxes on. Okay. IRS says, sure, do it all. And that can be a very big problem because, as Joe said, you want to limit the tax bracket. You want to limit the taxes that you're paying on income. And so if you're doing a conversion, you most likely would want to have someone who will do it for you systematically over a period of years. And while they're structuring those accounts so that money is there to be withdrawn at the appropriate time. Okay. And so,
there's pros and cons to a Roth conversion, and it has to make sense. The numbers have to work out. Just because you say this, well, this sounds like a great idea. Let's just convert it all. Like I was saying, it was like, whoa, wait a minute. We're going to need to pay taxes on all of the dollars that we convert in the year we convert them. So let's be strategic about this. Yeah,
we've had people come in and say, this is what I want. And so the question, is it right for you today?
Right.
There's times to do it. There's times you don't want to do it. Yep. And we get folks coming in and their main concern is, I had $250,000 in my 401k and my financial guy just converted it all, just got it over with. And when we break down the expense that was involved in doing that, all of a sudden they see why we say, come and talk to us, let's do a plan, let's do a systematic approach to this.
Yeah.
That
we
makes
don't know what
sense.
the tax rates are going to be in the future. We can still have a smart plan to do this systematically. It's going to take some time for those accounts then to continue to grow tax-free, but it has to make sense for them. Yeah.
Absolutely.
That's why a customized plan for them is very important. Not just a generic strategy that we apply to everybody, but a customized plan for you.
Absolutely. And obviously, if you're doing it all at once, like you mentioned, the advisor had suggested, and then you're going into a different tax bracket, what about some other tax advantaged investments? We have a couple minutes left. What else would you suggest?
Yeah, well, certainly we've got we talked earlier about taxable accounts are also, what otherwise would be a taxable account can also have some tax deferral if you're in the annuity world.
Okay.
So annuities will give you tax deferral and allow you to push that out until you roll that over or withdraw that money. The other one would be life insurance. You want to talk a little bit about life insurance?
Yeah, life insurance, you develop this cash accumulation within life insurance. And life insurance has many, many usages. And one of them is that if you have a large cash accumulation in there, there's a way of taking some of that cash accumulation out as income and not paying taxes on it.
Wow.
Yeah, and then of course you have municipal bonds as well that are not taxable.
Okay, excellent. Well, all of these things fit so nicely into someone's overall tax toolkit, if you will. Joe, what final words of wisdom and advice do you have for our viewers at home? We have about a minute left of today's show.
Yeah, absolutely. So I would say don't allow this to be overwhelming. Find somebody like us or us. Please call the number on the screen. Scan the QR code. We would love to speak with you, but come in and sit down and start planning out your accounts, your income, and your tax strategy. It's never too early to start.
Joe, thank you so much. And Al, thank you so much. To our viewers at home, if you're in the viewing audience today and you're asking yourself, wow, why haven't I heard about some of these tax toolkit situations before? This is the perfect time for you to call in to have that customized retirement plan completely designed for you. That number is 888-959-2743. 888-959-2743, or you can grab your smartphone, click on that QR code at the bottom corner of your screen. Thank you for spending time with us today on Midstate Money Talk. Be safe, be happy, be blessed. We'll see you back 1 week from today. Take care now.